Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago wheat. Okay, so there has and is a lot going on here in now quite a reasonably short amount of time. The most obvious ones have been the multiple contradictory head and shoulders patterns and reverse head and shoulders between March and July. However, until changeover last week, the dominant pattern here had been the fairly obvious bright red mid-February to mid-June bearish Andrews pitchfork. However, last week prices gapped higher with changeover up and out of this pattern, and it's now something I could actually have foreseen, not just with the changing prices, but because I drew this week, and it's something I don't normally like doing, a shallower bearish dark blue bearish shift pitchfork, and that's for the same move as the bearish Andrews one. We are today still well within this pitchfork between the upper time currently at 573.25 and the middle time below currently at 525. Why would I have foreseen such an incident? Well, the dark blue lower time and the bright red middle time, the dark blue lower time is currently 477 and the bright red middle time is currently 473.5, and that's of the dark blue lower time of the bearish shift pitchfork and the bright red of the bearish Andrews pitchfork. They cross over, and I have cautioned about crossovers, and they are usually periods of volatility, and that's exactly what we saw at the end of last week, effectively through changeover gap. Now, I can caution you about the next crossover, which I've circled in red on my daily chart, and which takes place on or about the 2nd of October. The gap higher also saw prices push up over the declining purple neckline extension, currently at 526. That's of the February to April 2024 reverse head and shoulders bottom, as well as the 38.2% absolute Fibonacci line at 521, plus the short medium moving average currently at 538.25, and sort of over the flatlining mauve medium moving average currently at 542.75. However, the market's rise was capped by the overhead flatlining long moving average, currently 552.5. And that is where we are now, falling below the mauve medium moving average and testing from above the short medium moving average. And tests the possibility of the volatility of about 2 weeks' time to come as well. Going back to the purple neckline, this was also the neckline for the recent May to August head and shoulders top. I'd earlier laid out targets below of a primary target X down at 504 and a secondary harder to reach target X1 down at 474. These targets are now under severe observation with the possibility of retirement. I will keep them on the daily chart for now, but I will consider them suspended until I see what the market does with the changeover gap between 524 and 537.75. Chicago corn. The dark blue mid-February to mid-April bearish shift pitchfork on my daily chart took over as showrunner for the market in June from the earlier and at the time quite successful bearish Andrews pitchfork for the same period. That was until this week, where with changeover, prices have gapped up and punched over the dark blue upper time, currently at 436. We also have been over resistance, that is now support, from the November 2020 high at 439.5 and the recent lesser Fibonacci level at 440. The move up was the result not only of the changeover, but also of the market getting squeezed between what was then the overhead 50% absolute Fibonacci line at 425 and bullish pressures from below, such that, as I said 5 weeks ago, and I quote, eventually something has got to give, end of quote. We now have a changeover gap behind us between 430.25 and 439.75. And it will be interesting to see how the market deals with this, as it's an obvious from this week's action that we have a new cap on the market, and that's the flatlining gold long moving average, currently 449.25. Beyond this, we have the recent 50% Fibonacci line at 454.75, and then the somewhat dubious resistance of the lower trend line extension of the July 23 to January 24 descending triangle, and that's currently 458. Kansas City wheat. The major pattern here continues to be just about the dark blue February to March bearish shift pitch fall. A few months ago, it was not a great looking pattern, having had both the lower time, currently 443, and the upper time, currently at 538.75, pierced but not broken. Thus, both times continue to play a role, a more significant role these days after the changeover gap we had last week up through the upper time. With only one close over it, much the same as we did back in June, they still play a significant role in showing the bearish angle of attack. What will now be interesting will be to see how the market deals with the changeover gap between 515 to 531.75. Now, since Thursday, we have seen the start of the cap filling begin, but it is still early. Interestingly, I had pointed out last month a new pattern that is still valid, and as I said at the time, at the start of it, interesting. Since May, we have a breach, though not broken, purple highlighted expanding wedge pattern, currently 501.5 to 588. This pattern started out as a double top pattern, Adam and Eve type, from the middle of May through to the middle of June. It then morphed into what was initially a small, though nowadays is quite large, breached but repaired, and today still operational, purple expanding wedge pattern. As I said earlier, the top of the market was capped by the dark blue upper time, with the move up pushing over the flatlining mauve medium moving average, currently 535.5, and the flatlining green short medium moving average, currently 529.5, as well as the significant 38.2% absolute Fibonacci line at 532.5. However, prices did not stabilize over any of these, at least so far. We're now back down below all of them, and testing the August 2024 low at 527. The thing to now remember is that there is no fallback pattern should the dark blue bearish shift pitch give way. That is the risk on the upside. At the same time, below the August 24 low, we don't have that much support until we come back down to the levels before the gapping move higher. And the ancient unreconstructed December 1999 to date uptrend, currently at 506.75. Yeah, from that period of time. And that is the risk on the downside, and for now it seems to be the greater risk. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.